Hey there, welcome to Tallied. I'm Kiran, and in today's video, we are going to see how to prepare a process account.
This is our second topic from the chapter Process Costing. If you haven't yet watched the previous video on Introduction and Basics of Process Costing, do check it out. You'll find the link in the description.
Moving on, the timestamps for this video are in the description below to help navigate yourself. If you have watched my previous video, you know there is a cherry on top, a chance for you to get a mention in one of my future videos. So don't forget to watch this video till the very end. So the agenda for this video is to learn how to prepare a process account. So let's get started. This is our first question. So let's first read the question. Example 1, a product passes through two processes. The output of process 1 becomes the input of process 2, and the output of process 2 is transferred to the warehouse. The quantity of raw materials introduced into the process 1 is 20,000 kgs at rupees 10 per kg. The cost and output data for the month under review are as under. So we have the table which you can look at. The company's policy is to fix the selling price of the end product in such a way as to yield a profit of 20% on selling price. Required, prepare a process account, determine the selling price per unit of the end product. So let's get started. This is the format of a process account. So we have particulars, units, rupees, particulars, units, rupees. That is the debit side and the credit side. So when we get started on the debit side, we always start with the raw materials introduced. So on the debit side, we write 2 raw materials introduced. Units is this 20,000 kgs. So my units is going to be 20,000, and rupees is going to be 20,000 into 10, because the price is given as 10 per kg. So 20,000 kgs will cost us 20,000 into 10. So I'm going to multiply 20,000 into 10, which gives us 2 lakhs. Moving on, next we have direct materials, and for process 1 we have the values in the column 1. So the direct materials also comes on the debit side, and we don't have units given here, but we have the cost of 60,000. So now we need to know that the units is something very important. Okay, so the units is how much will it add to my output. Now you may wonder why there is units under raw material introduced, but no units for direct materials. So our raw material, let's take the example of making jeans. Okay, so your raw material introduced is like the cloth. Okay, the cloth or the denim used to make jeans. Whereas direct materials can be buttons. Okay, so just by having more buttons, does your quantity of number of jeans increase? No, it does not. So direct materials does not increase your units in this case. So we have nothing under units, but raw materials, if I have more cloth, I have more jeans. So it does increase my number of units. So we mention it over here. So all our expenses will be on the debit side while calculating the cost. So next we have direct labor, 40,000. Again, by having more labors, it does not mean that you will get more number of jeans. If I have 5 or 10 labors with the same amount of quantity, my number of jeans will be the same. So labor, 40,000. Next is production overhead. So what is production overhead? Production overhead is anything that is related to your factory expenses. Let's say depreciation of your machinery, or even repairs and maintenance works. So it is given production overhead is 39,000. Again, these don't increase the number of units. So we account for only the amount. Okay. So now moving on, we have normal loss. So normal loss is given as 8%. So what is 8%? 8% of what? 8% of units introduced, that is 20,000. So we write by normal loss. So this normal loss is nothing but the normal loss realization. So if you don't know what normal loss realization is, it's how much value you get back for selling these scrap, how much value you get back. Okay, so for more details on this, you can check out my previous video on the basics of process costing. So normal loss is given as 8%. So the units will be 8% of 20,000. So equal to, okay, so that is 1,600 units. Now, what will the rupees be? If you go back to the question, you will notice loss realization of rupees per unit is given as 2 rupees. So to find the amount, we do 1,600 into 2. That gives us 3,200. So over here, we will mention that our scrap value is equal to 2. So this is our normal loss realization. So now you may wonder why we're taking normal loss realization on the credit side. Okay, so a normal loss realization is something that does not form a part of your cost. So let's take an example. Let's say you have to fit buttons on your jeans. Okay, so you have a few buttons that have come out on the wrong size. So these buttons cannot be used for your jeans, but this is considered as a normal loss. Okay, so now this has to be sold. So this wrong size buttons may be of a waste for you, but it may come of use to some other products. So you sell them at a lower cost. Okay, so when you sell them at a lower cost, so that is the value over here. So we have per button is selling at rupees 2. So now what happens is when you sell this, you get some money back. That is, this 3,200 is something you get back. Now, this does not form a part of your cost because this is money you are getting back. Okay, so that's why we show it on the credit side. Next, we have abnormal loss. We can't see abnormal loss in the question. So let's wait and let's go for the last output in units. This is our finished goods. So we read in the question that the output of process 1 becomes the input of process 2. So the output or the finished goods of process 1, we're going to account saying by process 2 account. And this is my finished goods. So they have given us the units as 18,000. So 18,000 units. Now, let us tally and see if there is any difference in the number of units. Okay, so I'm going to sum the units on the debit side, and I'm going to sum the units on the credit side. You will notice the credit side is short by 400. So this 400 is nothing but abnormal loss. If it had come on the debit side, it would have been an abnormal effective or an abnormal gain. So let's account for this abnormal loss. So the number of units is going to be 20,000 minus 19,600. So we have 400. Okay. So now how do we find at what rate or what is the amount for abnormal loss and the finished goods? Nothing is given in the question related to this. So now here comes an important formula of calculating cost per unit. So What is this formula? Let's take a look. So we have a working note and we have this formula. So the formula reads total cost minus normal loss realization divided by input minus normal loss units. Okay, so now what do I mean by this formula? Let's take a look at the values. So our total cost is nothing but all these expenses on the debit side. So let's see how much it has accounted for. Now our expenses come up to 3,39,000. So this is my total cost minus normal loss realization. Normal loss realization is nothing but 3,200, which is on the credit side. Input is 20,000, which we have on the debit side, and our normal loss units is 1,600. So now let's try and understand this formula because we're doing it for the first time. So here we're trying to calculate the cost per unit. So these are all our expenses. And as I mentioned before, normal loss is money we are getting back. So this has to be subtracted from the total cost because this does not form a part of your cost. So this is subtracted. And same goes for the number of units. This is the total units introduced, that is 20,000, but a certain number of units is going not into your product. So let's take an example. So 20,000, let's say this is my last process. So in that case, or any process. So 20,000 is how much I have introduced. And at the end, how much am I going to get? I'm going to get, let's say, apart from all of this, my output is 18,000, right? So I'm going to account for the cost of 18,000. So like for that example, we don't consider the 1,600. So it has to be subtracted. So our cost per unit, we take 3,39,000. That is the total cost minus normal loss realization, that is 3,200 divided by input units 20,000 minus normal loss units, that is 1,600. We get 3,35,800 by 18,400, which gives us 18.25. So now this is our cost per unit. So we need to know that cost per unit is the rate that we use for abnormal loss, for finished goods, and for abnormal gain. So for all these three things, we use cost per unit. So abnormal loss, finished goods, and abnormal gain. So now we know that it is 18.25 per unit. So we now know the values, we know the units, 418,000. So our amount is going to be 400 into 18.25. And for our finished goods, the amount is going to be 18,000 into 18.25. So now this gives us the value of finished goods. Now let's sum this side and see if it tallies. When we do this, both the debit and the credit side have tallied. So this is our process 1 account. Now we have to go to process 2. So we know that the output of process 1 is the input for process 2. The format is the same for process 2 account. We name it process 2 and we go on doing the same thing. So now by process 2 account will show up on your debit side as 2 process 1 account. The units will be nothing but the units we have here, 18,000. The amount will also be the same as 3,28,500 that we have in our process 1 account. Now going back to the question, we have direct materials for process 2, 40,000. Next, we have direct labor. and our direct labor is 30,000. And as we said before, these don't add to the units. So we're just going to enter the amounts. To production overhead is 40,250. Okay. So now again, coming back to normal loss. So our normal loss this time says 5%. So it's 5% of what? 20,000 or 18,000? It's going to be 5% of 18,000. 5% of 18,000 is 900. And the rupees is going to be the scrap value mentioned in the question, which is 3 per unit. So we have 900 into 3. And in this, let's just mention scrap value is equal to 3. Now, again, let's see the output given. Output in units is 17,400. So I'm going to write by. So over here, I'm going to write by finished goods. Okay, because there is no further process to transfer this to. So I'm just going to say by finished goods. And we have 17,400. Now let's again tally both sides, both the units, and see how much difference we get and on which side the difference lies. This time we notice that the debit side is less than the credit side. So this means there is an abnormal gain or an abnormal effective. So this we show on the debit side. So we write 2 abnormal effective, and the number of units is going to be 18,300 minus 18,000. So we get 300, the difference between both. Now again, for the cost for the finished goods and abnormal effective, we have to calculate cost per unit. So as I said before, for finished goods, abnormal effective and abnormal loss, we find cost per unit. So to find cost per unit, we again use the same formula. So we have our working note, our cost per unit formula, total cost minus normal loss realization divided by input minus normal loss units. So over here, the values we have are 4,38,750 is our total cost, minus 2,700 is our normal loss realization, divided by 18,000 is our input. So here we consider the input of 18,000 and make sure you don't consider 18,300 because we are considering only the input. So now 18,000 minus normal loss, which is 900. We get 4,36,050 divided by 17,100, which gives us 25.5. So this is our cost per unit. So now when we have to calculate abnormal effective, we do 300 into 25.5. And for finished goods, again, we do is equal to 17,400 into 25.5. So this is our finished goods values. And if you notice, both sides have tallied, the debit and the credit side. So now we are done with the first part of the question, which asks us to prepare process account. The second part asks us to determine the selling price per unit of the end product. So let's see how we can do this. So part B is calculation of selling price. So the cost per unit is 25.5. So this is nothing but the cost of your last process. So this will be the cost price of your product. Now you add profit. So profit in the question is given as 20% on selling price. Now 20% on selling price is nothing but 25% on cost. How do we come up with this? Let's take a look. So now we have our working note in which we say, let's take selling price is 100. Then profit is 20% of 100, which will be 20. Okay, so our cost is nothing but selling price minus profit. So 100 minus 20, which is 80. So now what is the profit percent on cost? 20 divided by 100, 20 divided by 80 into 100. Okay, so that gives us 25%. So now we use this 25% to calculate our profit. 25% of 25.5. So we do 20 is equal to, so we get 6.375 as the profit. So our selling price will be nothing but cost plus profit. So 31.875 is the selling price. So with this, we are done with the first question. So in our first example, we have seen how to calculate normal loss realization. We have seen how to calculate abnormal loss or abnormal effective. The number of units we calculate by the difference in units on both the debit and the credit side. We have also seen how to calculate the cost per unit with the formula we have learned, and how to calculate the finished goods that has to be transferred to the next process, or which is the final good. So now let's go on to the second question. And I request you to watch the second question because there are a few things that we have not covered in this question that you will be learning. That is, not always is finished goods given in the question. So in our first question, we have the finished goods given to us for each process, that is 18,000 and 17,400, but this is always not given. So this is something we will be doing in the second question. Also, sometimes after process one, some part of the finished goods can be sold, while only the remaining is transferred to the next process. So in our case, the entire finished goods of process one was transferred to process two. So let's look at what will happen if only a part of the finished goods is transferred while the remaining is sold. And finally, we know that we calculate abnormal loss or abnormal effective by the difference in units on the debit and credit side. But what happens if we don't know the number of units of our finished goods? Then we need to know how to calculate abnormal loss and the formula for abnormal loss. So for all of this, stay and listen to the second question. So let's get started with the second question. This is our example 2. So Bangalore Products Limited manufactures a chemical in 3 processes. The details of these 3 processes are as follows. So we have a table which tells us how much is transferred to the next process and how much is transferred to the warehouse for sales. In each process, out of the total weigh put in, 4% is wasted and 6% is scrap. The scrap is sold at rupees 6, rupees 10, and rupees 12 per ton in 1, 2, and 3 processes respectively. For the month of October, the details of expenditure are, so they have given us the material or the input in each process. So production labor cost is process 1, rupees 20,608, process 2, 12,560, and process 3, 11,580. For the month of October, the office and administrative expenses worked out at 15,567, which is to be charged equally for all the 3 processes. Prepare process accounts, calculate the cost per ton in each case. So let's get started with this question. So we already know the format of the process account. So here we start off with the particulars, that is units introduced. So in this question, material or units introduced, raw materials introduced is the same. So process 1, 2,800 tons of material at rupees 40 per ton. So 2 materials. So our units is going to be 2,800 and our amount is going to be 2,800 into 40. Moving on, next we have the labor. So to labor for process 1, the value is 20,608. And finally, we have the office and administrative expenses. Again, no units. And our amount is 15,567 divided by 3 because it is charged equally for all the 3 processes. 15,567 divided by 3, which gives us 5,189. Now we'll take a look at the normal loss. For normal loss, the question is given us in each process out of the total weight put in, 4% is wasted and 6% is scrap. So now 4% wasted is our normal loss. So 4% of what? 4% of 2,800. So we have by normal loss equal to 4% of 2,800, which gives us 112. Now, what is this value? So it says that in each process, the scrap is sold at rupees 6 in our process 1. So scrap value is 6. So let's mention that here. So our amount will be 112 into 6. This gives us our normal loss. Now we have our finished goods, right? So there is no information given about finished goods except what percentage is transferred to the next process and what percentage is transferred to the warehouse for sales. So let's just write by process 2 account finished goods. We don't know the number of units. And now let's just calculate abnormal loss. So abnormal loss, last time what we did was we found the difference. But in this case, we have to use a formula. So the formula will be abnormal loss is equal to units scrapped minus normal loss. So it's given that 6% is scrap and 4% is waste. So 6% of 2,800 minus 4% of 2,800. So if we do the working of this, we will get this. So abnormal loss formula is unit scrapped minus normal loss unit. So let's calculate 6% of equal to 6% of 2,800. It gives us 168. And we have already calculated 4% of 2,800, which is 112. So the difference gives us 56. So now this is our units for abnormal loss. So we have by abnormal loss 56 units. So below, I'm also going to mention the formula. We need to know the quantity for our process 2. Okay, so we know that some amount is transferred to process 2 and the remaining is going to our warehouse. So this we will write as by costing P&L account, because this is something we are selling. So how do you find the units for both of these? So we know now that we have the abnormal loss, we can find out the difference. So we total the sum and we find the tally. We total the units on both sides. Okay. So now our difference, I'm going to show you on the side, is 2800 minus 168, which gives us 2632. So 2632 has to be divided between transfer to next process and move to warehouse for sales. So this is in the percentage 66.66 2 by third percent and 33 1 by third percent. So by process 2 account will be transfer to next process 66 2 by 3%. So let's try to calculate. Is equal to 66. 2 by 3 is nothing but 0.6666% into 2632. So this gives us the units for what will be transferred to the next. And for costing and P&L will be the remaining. I can either calculate 33.33% of 2632, but in this case, I'm just going to take the difference. So that will be equal to 2800 minus this value 1922. So this is the same as 33%, 33.33% of 2632. So now that we have all the units, we can calculate the cost per unit. So we know the formula for cost per unit is total cost minus normal loss realization divided by input minus normal loss units. So our total cost is our total cost is 1,37,797, and our normal loss realization is 672 divided by input is 2,800 and normal loss units is 112. By putting the values in the formula, we get the cost per unit as 51.013. So now let's find the values, or let's obtain the values of abnormal loss and the finished goods. So we multiply units with the rate or the cost per unit to get the amount. Okay, so now we are done with the first process. Now we will look at the second process. So only this part by process 2 account will be transferred to our second process. So for this, we have by process 1 account, our units will be the same as what we have here. And our amount will also be the same as what we have in our process 1 account. And in this question, materials introduced here also have number of units. So in process 2, 320 tons of materials at 64 per ton. So over here, this will be 2 process. Yeah. So over here, we will have 2 materials. We also have units in this question, 320. So this is nothing but extra units, or let's say units that have completed process 1 and you have in your store. So this becomes your input for this process as well, and it will increase your total number of output. So 320 at 64. Now we have labor. Labor for process 2 is 12,560. 12,560. And then we have our office and admin expense. So this is again the same as last time, 5,189. I can either take the same value or I can again do 15,567 divided by 3. Now, the normal loss is also going to be 4% in this case. So this time it will be 4% of the sum of both of this. So we need to remember, when we are calculating 4%, it is going to be 4% on the sum of both these values. So I'm going to write is equal to 4% into this plus this. That gives me 82.979 units. And the rate is going to be rupees 10. Now we calculate abnormal loss the same way as we did before. So this time you can also do abnormal loss is unit scrap minus normal loss units. We can directly subtract the percentages. So 6% minus 4% is 2%. So 2% of the units introduced. So that is nothing but, let's sum this. So the sum of these two gives us 2074.49. So 2% of this is going to be 41.489. So this is our abnormal loss units. So let's write down the formula. Now we move on to find the finished goods. So again, we will have by process 3 account and by costing P&L account. So how do we find the units of this? First, we find the difference in units. So let's sum the units on the credit side. So now the difference is what we're going to calculate separately on the side is equal to 2074 minus 124.46. So we get this as the difference. Now this difference has to be separated in the ratio 60%, 40%. So 60% is transferred to the next process. So this is going to be is equal to 60 percent into 1950.0217. And for costing P&L, like we did before, we can either do 40% or we can take the difference. I am going to take the difference. So the difference will be equal to 2074 minus 1294.4825. So this is our difference and the units have tallied. Now we calculate cost per unit so that we can find out abnormal loss and our finished goods. So we use the same formula and we have our total cost as 1,27,732.2. So that is my total cost. Normal realization is 829.79. So that's here. Divided by total number of units, 2074.49 minus 82.97, which is nothing but our normal loss. So by doing this, we get the cost per unit as 63.7216515. So we use this to find our abnormal loss. We use it to find our finished goods. If needed, I can also mention over here that this is 60% of, let's just check, 60% of 1950.0217. And mention it in the bracket. I can do this for both. Moving on, we are done with our second process account. Now coming to process 3 account. So we have two process 1. Our units will be the same as what we have transferred. And the amount will also be the same as what we have transferred from process 2 account. Next will be 2 materials. Materials in the question for process 3 is given as 2,520 tons at 28 per ton. That's 2,520. 2,520 units at 28 per ton. This gives us 70,560. Then our labor cost is 11,580. Labor is 11,580. We know that labor does not increase the number of units, so we don't mention anything here. And lastly, we have 2 office and admin. This is divided by 3, so it will be the same value as process 2, 5,189. So we again have to calculate by normal loss Normal loss is going to be nothing but 4%, is given in the question, 4% of 4% of this value we have here. Three six nine 0.0132 0130. This is our normal loss units. And for the normal loss or the scrap value, we have 12 per ton in process 3. So we are going to multiply this into 12. Now coming to by normal loss. So over here we can mention that scrap value is 12. Coming to abnormal loss, calculating the units, we do 2% of 3690. So we already saw that unit scrap is 6% minus 4%. So we're directly doing 2% of 3690.01. So this gives us equal to 2% of 73 was equal to this. Now so now in the third process, we don't have anything that is going to be transferred to the next process, but the entire is transferred to the warehouse for sale. So in this case, we will write only by costing P&L account. So now the difference in units will entirely go in costing P&L. So it's equal to this minus 221.400. Now let's calculate the cost per unit. So we use the same formula. Total cost minus normal loss realization divided by input minus normal loss units. So our total cost is 1,61,884. 1,61,884.16. Our normal loss realization is 1,771.206. And our input is 3,690.01302. And our normal loss units is 147.6005. So by doing this, we get the cost per unit as 45.19. So let's multiply this on both sides to find the abnormal loss and the costing P&L value. Let's sum the credit side value to see if our account tallies. Yes, our accounts tally. So this is the end of process 3. Now in the question, they have asked us to mention the cost per ton in each process. So this is nothing but the cost per unit we have calculated. So let's mention this separately. So for the cost per ton in process 1 is equal to 51.013. In process 2, the cost per ton is 63 0.721. And finally, the cost per ton in process 3 is 45.19. This brings us to the end of this question as well. I hope you have understood everything in these two questions. This brings us to the end of how to prepare a process account. In today's video, we have covered how to prepare a process account. In the next video, we will see how to prepare the remaining accounts: normal loss, abnormal effective, and costing P&L along with the process account. If you found this video helpful, do like this video, share it with your friends, comment if you have any feedbacks and think I can improve or do something better, and don't forget to subscribe for more such videos. Now, what we have all been waiting for, the cherry on top, a short and simple quiz that will help revise and summarize everything we have learned in today's video. 6 questions, 10 marks. Call your friends to compete because 3 random highest scorers will get a mention in my future videos. Thank you for watching, and I will see you all very soon.